1. Start with energy, explain with authority, highlight with emphasis, end with warmth. All right, let's get right into it and look at Palantir Technologies. With the markets closed for the weekend, we are looking at the final print from Friday, November 7th, 2025. The stock closed the session at $177.93 per share. That was a solid move, up $2.88 or 1.65% on the day, capping off a very strong week for the stock. Now, the immediate expectation for anyone looking at that $177 price tag, especially if they've followed this company for years, is one of confusion. Palantir is supposed to be the story stock, the volatile, secretive, almost cult-like holding that's all promise and no profit. It's the name you'd trade on the Robinhood app, not one you'd build a retirement on in your Fidelity IRA's account. That's the story. But the reality, and what that 1.65% pop on Friday truly represents, is the final grinding acceptance of a new truth. That $177 price isn't a fluke. It's the market, including the slow-moving, skeptical institutions, finally being forced to acknowledge that Palantir has done what many thought impossible. It has become a consistently GAAP-profitable, high-growth commercial AI company. The disconnect between the old black box narrative and the new AI platform reality is the entire reason this stock has been so explosive. Let's establish that common ground, the old expectation. For years, if you logged into your Fidelity brokerage account and looked up PLTR, you saw a mess. You saw lumpy revenue, entirely dependent on massive, unpredictable government contracts. You saw a company that was notoriously difficult to understand, led by a CEO, Alex Karp, who seemed more philosopher than executive. It was a stock that felt more like a bet on a sci-fi future than a serious investment. It was the kind of name that a SoFi robo-advisor would probably be programmed to avoid due to its volatility and lack of profitability. Self-investing in Palantir was an act of faith. The bear case was simple, and for a long time correct. They would never be able to break out of their government silo. They couldn't sell to regular businesses. The product was too complex, too expensive, and too creepy. But here is the challenge to that thinking, the reality that has been methodically building for 8 straight quarters and just exploded into view. That $177 price is a direct result of the company's third-quarter earnings report that landed back on October 30th. That report wasn't just a beat, it was a fundamental thesis change. Palantir reported its 8th consecutive quarter of GAAP profitability. Let me repeat that. A company that was infamous for burning cash and diluting shareholders with stock-based compensation is now consistently profitable. That's the milestone that gets it eligible for S&P 500 inclusion, which forces all the passive Fidelity ETFs and Fidelity mutual funds to buy it. But that wasn't even the headline. The headline was the source of the growth. Total revenue grew a strong 23% year over year, but the U.S. commercial business, the very segment bears said would never work, saw revenue explode by 52%. This isn't just growth, it's hyper-acceleration. This is the reality. While everyone was watching NVIDIA stock sell the hardware, Palantir has quietly positioned itself as the essential software layer, the operating system for enterprise AI. That 1.65% move on Friday wasn't a random trade. It was continued institutional accumulation. The big money at Fidelity Investments and Fidelity Wealth Management divisions, who ignored this stock for years, are now reading these reports and realizing they are dangerously underweight the one software company that is actually monetizing AI right now. Let's dig into that recent movement because it tells the whole story. The stock didn't just pop on earnings and stop. It has been grinding higher with heavy volume ever since. This is not the typical Robinhood stock trading pattern of a one-day spike and a collapse. This is institutional buying. This is what it looks like when a Fidelity trading platform's prime brokerage desk gets massive buy orders from hedge funds that are being forced to cover their shorts and go long. Why? Because of one thing: AIP, Palantir's artificial intelligence platform. The company's new strategy of running AIP bootcamps, intensive multi-day workshops where they get new customers in a room and build a functional AI application for them in days, is a masterstroke. The Q3 earnings call was full of data on this. The number of U.S. commercial customers is surging, and the sales cycle has compressed from months or years down to days. They are closing deals at a rate that is simply unheard of in enterprise software. This is the investment help you need to understand. Palantir isn't selling AI. It's providing the factory floor, Foundry, and the new robotic assembly line, AIP, that lets other companies, like a SoFi trying to build a better credit risk model, or an industrial company trying to optimize its supply chain, to actually use the large language models everyone is talking about securely with their own private data. This is what separates it from the pack. It's not a generic, intelligent portfolio play. It's a specific, high-conviction bet. While other tech companies are struggling in this high-rate environment, Palantir is thriving. Their government business, Gotham, is also accelerating again, up 19%, as geopolitical instability makes their defense and intelligence platforms more critical than ever. So you have a two-cylinder engine, a stable, growing government business, and an explosive, accelerating commercial business. This is why the stock, even at $177, is attracting so much attention. Traders on the Interactive Brokers platform are looking at the options flow and seeing massive call buying, betting on a move to $200 and beyond. This isn't like buying Apple stock for its dividend or Tesla stock for the narrative. This is an online investment in a company whose core metrics are all moving in the right direction at the same time. Now, let's briefly cover what the company actually does, because it's no longer a black box. It has two main platforms. Gotham is the original, built for government. It's the operating system for defense and intelligence, used to fuse disparate data sources from satellite imagery to on-the-ground reports into a single picture for decision-making. Foundry is the commercial version. It's an operating system for the modern enterprise. A company like Airbus uses it to optimize its entire manufacturing line. A pharmaceutical company uses it to accelerate drug discovery. And now, AIP sits on top of Foundry. It's the layer that connects all that private data to the power of generative AI. Safely. It allows a bank to use an LLM on its private transaction data without ever exposing that data to the public internet. This is the key that unlocks AI for every serious, regulated industry. It's not one of many investing sites offering the same thing. It is a unique, deeply integrated platform. So what is the path forward from $177.93? The catalysts are clear. First, continued S&P 500-style GAAP profitability. If they keep this streak alive, passive inflows are inevitable. Second, the continued explosion of the U.S. commercial business. The bootcamps are a lead generation machine, and the market is now modeling in sustained 40 to 50% growth. Third, the next wave, international commercial. Their international commercial business has been lagging, but if they can replicate the U.S. bootcamp strategy in Europe and Asia, that's a whole new growth vector. But the risks are just as real. First, valuation. This stock is expensive. At $177, it's trading at a massive multiple of sales and forward earnings. It is priced for perfection. Any slowing in that U.S. commercial growth, even a little, and the stock could be cut in half. Second, competition. Microsoft, Amazon, and Google are all trying to build their own versions of this AI platform. The bull case is that Palantir's decade-long head start in complex data integration gives it an unassailable moat. The bear case is that Microsoft, with its massive sales channel, will just bundle a good enough solution and eat Palantir's lunch. This is the central debate that Interactive Brokers trading desks are modeling. This all comes down to one core question about the future of enterprise AI. I want to hear from you. Comment below with how many companies you think will actually be building their own complex AI platforms versus just buying an off-the-shelf solution from a company like Palantir. Is this a winner-take-all market, or will there be many players? To wrap this all up, that $177.93 closing price is the market's stamp of approval on a new reality. The old expectation was that Palantir was a secretive, overhyped, unprofitable government